Hello and welcome, What the Finance is, to another episode of the What the Finance podcast, where we talk to experts to help gain a greater understanding about what is happening in the world of finance, investing, and markets. So on today's podcast, I'm happy to welcome David Wu, who's a former top-ranked Wall Street strategist, IMF economist, and founder of Unbound, which is a global forum devoted to the promotion of fact-based debates about markets, politics, and economics. So David, thanks for joining the podcast today.
No, thanks for having me.
You're welcome. So, my first question is, you're someone who obviously has a plethora of experience at some of the largest institutions in the world, and you're known for bold and out of consensus calls within global macro. So can you maybe talk to listeners through what is your thought process behind some of your predictions, and, where does it all begin? And I guess, how does it get to the point where you're happy to put a position on?
Yeah, I think, listen, I think the thought process is a fairly eclectic thought process, which reflects sort of the background, that I come from. I've got a PhD in economics from Columbia University, so I'm a trained, economist when it comes to international finance, open economy, macro. Got a very strong theoretical background there. I started my career, as you said, at the International Monetary Fund. So I spent 5 years there. I worked on the Russia crisis. I worked at the Asian crisis. I worked in Eastern Europe. So from that point of view, I actually have, hands-on experience working in countries alongside policymakers, understanding what they're trying to achieve and trying to help them how to achieve. Because, by the way, this is actually very important, because so much of what we try to do in the markets is simply trying to predict what policymakers are going to do next. What is the Fed going to do? What is, Liz Truss going to do? And so on and so forth. So understanding the objective function is hugely important, and understanding the consultation process around decision-making is hugely important. That's another experience that I had. And in the last 20 years, I've been working on Wall Street, until I recently stepped aside. And then I started in foreign exchange, and I started actually in emerging markets, by the way. My first job was at Citibank in London, covering South Africa, by the way. That was my first assignment, coming out of the IMF. And it was fascinating, but so I started doing emerging markets, and then I started to run foreign exchange research, and then I took on rates and I took on emerging markets. So basically, by the time I finished my career, I was basically, I managed a top-ranked macro strategy team. But this is where it gets very interesting, because I would say that the most difficult transition for me, throughout my entire career, was the transition to markets. Going from academia to public policy was relatively easy, but going from economics, public policy, to markets was very, very difficult, because, one thing is to really understand, the theory, the policy making in the economics. Another thing is to be able to translate into markets. What does that mean? People don't want you to tell them, so what happened yesterday? What happened last week? People want to know, okay, fine, given what you think about the world right now, so what is the best trade to put on? And I think from that point of view, being able to look beyond, and I think from that point of view, I think I consider myself very fortunate, because I think, I've got, luckily, it's not that I even tried, because, when I was your age, I wanted to become a filmmaker. I wanted to become a novelist. In fact, I've written a couple of novels. But the point here is that my experience, in some sense, lend themselves very well to become who I was, because, I understood, I was born in the U.S. I grew up in Asia. I educated in the U.S. and I spent most of my working career actually in Europe. So I understand the U.S. very well. I understand Europe very well. I understand China very well. I don't think there are many people in the world. Maybe there are going to be there are definitely people who understand China better than I do, or Europe more than me. But I don't think anybody understands Europe, U.S., and China, and the Middle East as well as I do. Okay. On top of that, given my background in foreign exchange, as you know, foreign exchange by definition, is basically a global game. Right? My team covers something like 125 countries. We were the number one ranked team for that. But you know what? So from that point of view, so I always had a sort of very global perspective, a way I think about things, and I think all that together and the experience, I think, has made me who I am. Now, it doesn't mean that I'm always right, but it probably means that I'm ahead of the market. If you look at what's been going on this week and last week in the market, it was a total joke in my view. It shows me that the market has completely lost the plot. It shows me the market has no idea what it was doing until today. And then wham. But the point here is that while I may be proved right over time, sometimes it takes a while. I mean, sometimes, I have to really put my neck down on the line and then, in the hope that, market is going to be proved wrong and I'm going to be proved right. But it's always a struggle because sometimes, it's much better to think one day ahead of the market as opposed to thinking 3 months ahead of the market. Okay. And I'm very often 3 months ahead of the market. And that serves me well with big institutional investors. But on a day-to-day basis, I'm not much of a good day-to-day trader. Let's put it that way.
Yeah, because a lot of the times that's a challenge. It's like you can have these ideas and you can be right, but it's actually taking advantage of, how the market moves because it doesn't always move how we think it's going to move.
Yeah, I mean, if you look at what happened the last week, right? I mean, think about this. I mean, last week, for example, was very interesting, right? We had gone through, rates had backed up in the previous 3 weeks. Stocks had gone down. Russia literally had, Europe's basically, against the wall when it comes to the energy blackmail, right? I mean, I was sure that the stock market was going to basically continue to tumble, okay? Now, of course, however, contrary to my expectation, the market basically rallied like mad. And I think there were two main reasons why the stock market rallied up, even though rates were actually still going up last week. I mean, think about this, ECB surprised the market by hiking 75 basis points. That was certainly not in the price because after the ECB hike, two-year rates basically in Europe and the US both back up 20 basis points. So it was not like all of a sudden policymakers had thrown a lifeline to the market telling them that we're about to pivot, nothing like that. So what happened last week in the market? Like the stock market went through the roof last week, okay? Credit spreads came in. Why? I think the explanation is pretty obvious because by the second half of last week, everybody's saying, oh, wow, listen, Ukraine is destroying, the Russian forces, in Eastern Ukraine, that, this basically spells the end of the war because Putin very soon is going to be defeated. He's going to be crawling back to Moscow, okay? And at the same time, the market decided that, US CPI number is going to come in basically lower than expected, that we're going to see more evidence that basically US inflation has peaked. So these were the two, in fact, just before the CPI number, we know that people basically bought something like $2.6 billion QQQ, okay? Presumably betting that we were going to have another market-friendly CPI number. But I was basically making the case already Sunday in my video podcast, my blogger, that this is absolutely insane. It made no sense at all. Because to me, the fact that Ukraine scored a victory against Russia last week, in fact, if anything, makes me much more pessimistic. Because what it shows me is that Putin now may have no other choice but to resort to even more extreme responses. That there is nothing more dangerous than a desperate man. Okay, that now if you thought that he was going to basically apply the energy lever hard, now he's going to go absolutely nuclear. Okay, and I also thought, you could watch, you come and subscribe to my blog, you'll know that last week I was making a strong case that CPI is going to surprise the upside because of the core services inflation, which I thought that last month's basically number was dragged down by airfare dropping 7.8%. There was no chance that was going to happen again. So I said that core services inflation was going to rebound to about 0.5%. Guess what? We're 0.6%, okay, today. So I could have told you, okay, already last week that this was going to end very poorly like it did today. But you know what? It doesn't mean that you might have lost some money on the way before you got bailed out. But so from that point of view, but nevertheless, the way I think about this is that the market right now, forget about Wall Street. The average age of a Wall Street trader is probably 35. So these guys have only seen one cycle, 2 cycles. They've never seen inflation. They've never seen war, okay? People like yourself, all the millennials who've been trading the market, forget it. They don't know anything, right? Basically, they're in their 20s. They've been trading the last 3 or 4 years. They say, wow, this is easy. Just basically buy every time you have a sell-off. So from that point of view, I kind of feel like I'm constantly fighting a market that just doesn't know what he's doing. Now, of course, This is why, institutional investors want to talk to me, because you know what? In some sense, like, the perspective I can bring to the table, I think is one that very few people have it these days. And what I want to do, like, the reason why I left Wall Street was because, to launch my own thing, I've got my own YouTube channel, Founder of Unbound, is because I feel sorry that Main Street is so often so disconnected from what actually is going on. I want to basically help make everybody smart, because at least smarter. And I think this is very important. And I think the last week, again, I'm just sort of like, to me, what happened today is so obvious. To think that NASDAQ was going to be down 4% today, okay, on the back of a CPI number that was somewhat stronger than expected, just tells you the market got it completely wrong. That the market placed huge bets on the other way. That's the only explanation. The price action today. Okay.
How have you seen the market change over your career? Do you think it's just become so much more reactive, and it's so much, as you said, there's so many people going long because they haven't seen anything else? Is that what you're seeing? They're not sort of pricing in the potential catastrophic events around the world? Or what's your opinion?
I think the market has been, evolving, okay, for the last 10 years. I mean, clearly the last 10 years, I would say the markets have changed a lot in one fundamental sense, which is that, first of all, we haven't, let's put it this way. I would be, what people call a global macro guy, right? That's what I do for a living, right? A global macro, right? So a global macro guy basically, loves inflation, loves business cycles, loves basically, volatility, okay? And loves basically, basically when countries diverge, okay, as opposed to converge. Now, what's happened in the last 10 years is that because inflation, okay, sort of disappeared, okay, after the 2008, Great Recession, was a very, very slow, gradual recovery, in the global economy. As a result, inflation was very lackluster. As a result, you know what? The only economics you needed to know for most of the last 10 years was basically quantitative easing, okay? So, because, if you understood that inflation was going to stay low and that quantitative easing was going to become, essentially the fact of life, then you forget about it. Just close your eyes and buy whatever riskiest assets there are out there. And that's it. You don't need to do any global macro analysis, okay? And that's why the last 10 years, to a great extent, global macro people like me, a lot of them just went out of business. Right? I mean, there are very few global macro hedge funds that didn't close down actually in the last 10 years. I mean, think about this, right? I mean, we can name names, but I won't do that, here. But let's just say that some of the biggest names in global macro either closed down, either basically folded, would basically turn into a family office. Okay. Now, at the same time, something else is going on, which is that because we've been in this kind of liquidity-driven kind of market, it became increasingly difficult for money managers to achieve any kind of alpha. For one thing, there's a lot of because if we're in a liquidity-driven environment, basically rising tides lift all boats. It didn't really matter whether you are a value-oriented guy or whatever. You just buy, the best investment would have been to buy the riskiest investment. That's it. You don't have to even think about anything else. This is why money managers lost the plot. I mean, not that they lost the plot, that whatever skills, okay, that bring to the table in terms of, okay, searching for value, doing the analysis, all that became bullshit. Okay, so they started to underperform their benchmarks. As a result, retail investors say, well, why would I basically pay somebody 2% a year to basically underperform the benchmark? Why don't I just basically buy an ETF? So what happened was that you saw this massive migration out of passive, actively managed vehicles to passive vehicles like ETFs. Now, what happened with that is that as money came out of active to passive, that means active guys started to underperform even more, okay? Because when things are going to passive, like when you buy an S&P index, it didn't matter whether it's good company, bad company, your money went proportionally to all of them, driving all of them up, actually. So as a result, like, if you are a value investor, you got killed. If you're a long short value, you got killed. So all that was left was momentum. Like momentum is what, so from that point of view, every millennial idiot who's never studied economics were nothing. Just doesn't know anything at all. Momentum, everybody understands momentum, right? You just basically learn a few trend following thing. And, as long as the ADX index is above 25, as long as above the 20-day moving average, 15 moving average, that's it. That's all you need to know. So you get into it basically. So in that sense, we've gone a very long way. And I think from that point of view, I think this is why, but thank God, I think that's over. I think we're now going to be going into a very treacherous time. I actually think that in my old age, I'm about to basically come back in a very big way, to the extent that I think everything I know that I've learned the last 20 years is going to serve me well. And all the millennials, unless they learn quickly what they're doing, they're going to be blown out of water. Okay, because the world is changing. The world is going back to what it used to be. And what it used to be is not very nice. It doesn't make it easy to invest.
Yeah, it definitely looks like that. So, you've mentioned a few different trends occurring, obviously Russia, Ukraine, inflation. In terms of your own predictions, what are the ones that you have the most conviction on that are going to occur in your time frame?
I think for me, a major thing, a big focus for me is the geopolitical, clash between the West, and you can call it the East, you can call it whatever. I mean, there's no doubt for me, this is not about Russia. It's not about Russia versus Ukraine. This is about the US versus China. Okay. My view is that, US provoked Russia into invading Ukraine. Okay. Because the way that the US was going about, essentially pushing for EU, NATO enlargement, the way the US walked away from the ABM treaty, the INF treaty, it was very clear that Russia was left with no choice. When you had US basically missile launchers, in Romania and now in Poland, that could basically fire nuclear missiles to hit, Moscow in 5 minutes. Guess what? Putin doesn't have much of a choice. The fact that newspapers don't talk about that, that's the newspaper's problem. So you have to know a little bit about history to understand why this thing is so important, because that in itself is very important to understand. This is not about, a dictator decided to basically take over the neighborhood. The truth could not what is taken generally for granted cannot be further from the truth. Now, once you realize that, the US basically views China and Russia together as major threat to the US hegemony, that under Trump, Trump did everything to drive a big wedge between China and Russia. Okay, this is why, Trump basically, whenever he talked about Xi Jinping, he said, well, the guy's a great man, he's my best friend. Every time Trump talks about, Putin, he'll say, well, he's my best friend, he's a great man. Because Trump understood the danger to the US when China and Russia got together, okay? Biden, on the other hand, did everything he could from day one to bring the two together. In fact, they just basically, he's been presiding their shotgun wedding, if you like. Now, I think part of it is because I think some of the neocons, the hawks in Washington decided, the clash between US and China is inevitable. Let's start by taking out its basically junior partner. And I think that's what the Ukraine-Russia war is about. Now, it's going to be very interesting because this week, as you know, that Xi Jinping and Putin are going to be meeting. What do you think basically Xi Jinping and Putin are going to talk about? Well, think about this, right? China in the last 6 months has been very careful not to violate the US, basically sanctions against, Russia, right? China's been buying oil and gas from Russia, but that's not a violation of any sanctions, right? But China's been very careful not to violate US sanctions in terms of technology export to Russia and so on and so forth. This is why if you look at actually Russian imports from China, it's actually down from basically relative to the pre-war period. However, that doesn't seem to have served China very well, right? Because Liz Truss, basically before the election, said that as soon as she's elected, she's going to designate China as an official threat to British national security. It's pretty funny, right? China's the other end of the world. She wants to basically label designate China as an official threat to British national security. The only other country that has that status, of course, is Russia. That was when Britain basically upgraded Russia to official threat when Russia invaded Ukraine. China did not invade another country. It didn't even violate the sanctions. Now it's about to get designated as a threat anyway. And Biden basically 2 weeks ago in his latest sanctions when it comes to technology restrictions, export of, restrictions on technology export, it was 2 countries on that list was China and Russia. So now if you're China, you figure, wow, listen, it didn't matter that I did not violate, US sanctions against Russia, right? I mean, I'm basically being put in the same box. So what are you gonna do, you think? Okay, so I think it's going to be very interesting. I think actually there's no question we are already, in the middle of a new Cold War. And this new Cold War has many, many dimensions, okay? For one thing, it's going to be highly inflationary. Because if for nothing else, what you're talking about going forward in the next 5 years, 10 years, we're going to have to build 2 of everything. We're going to have to build 2 basically trading system. We're going to build 2 payment systems. These countries, these blocks, that is China and Russia and maybe some other countries like, Southeast Asia, Saudi Arabia, Brazil, all these countries, they're going to have to basically, they may end up basically divorcing themselves from US, Japan, and Europe. Okay, so from that point of view, it's like, well, this is not going to be fun because this is tearing up globalization as we know it. And globalization was the reason why we had very low inflation, where central banks were basically constantly, essentially injecting liquidity in one form or another. That was so easy to make money. So this is to begin with is bad news, okay, for financial markets that we're now openly, okay, in a geopolitical standoff. That, believe me, this war in Ukraine is not going to be over anytime soon, okay? It's going to be a prolonged thing. It's going to be a painful thing. In fact, it could potentially ultimately lead to a breakup of the European Union, in my humble opinion, which will have very, very negative ramifications. You'll find out oil is actually a good buy here. Now, meanwhile, COVID, what did COVID really do? The biggest impact of COVID, the gift of COVID for someone like myself, is the fact that, people are now suffering from long COVID. They're suffering from basically, essentially negative side effect associated with the vaccine. I can tell you, I have 2 booster shots. I live in Israel, and I can tell you right now, there's a class action lawsuit against the Israeli government about basically the negative side effect associated with the 3rd vaccine. Okay, because I can tell you, I don't know, my immune system is shot to pieces. As a result, I get sick rather easily, much more easily than I ever did. I'm a pretty healthy person otherwise. But my point here is that this is the reason why labor participation rate has not recovered to the pre-pandemic level. I mean, this is pretty much everywhere in the world, by the way. That unemployment rate is all near all-time low because all these people who left the labor force are not coming back in a hurry. Either because they don't want to get vaccinated, or that their health has taken a hit, or that whatever, there's something along with COVID. Nobody wants to admit it because right now, as you know, if you basically even mention the word COVID pandemic, you could potentially get, censored even on YouTube. But the point here is that this is having a massive economic implication. Actually, ironically, it's interesting because by basically pushing unemployment rate to all-time low, is giving labor, workers, first time in 20 years, a goddamn fighting chance to negotiate for higher pay. So you're talking about all of a sudden companies not going to be able to outsource to China so easily. At the same time, their workers are demanding higher pay. So what are you going to do? And then on top of that, governments are still resorting so easily to fiscal policy. I mean, Europe just basically decided to basically hand out $500 billion of energy stimulus. What do you think that's going to do? That just means that British households, European households, as far as they're concerned, energy prices haven't gone up that much, right? Which means that they're going to spend more energy than they would otherwise, which means higher prices, tradable prices for energy. That's what it means, which means more inflation, which means more hawkish central banks. You get the point. So I'm just telling you that we are living, sometimes in life, in a market, you understand whether you're trading a business cycle or you're trading a structural cycle. In my view, we are now in a different structural cycle. And the war in Ukraine, okay, and the longer term consequences of COVID are two that are basically putting upward pressure on inflation. And inflation is not going to be good for financial markets, especially a market that's never traded inflation seriously for the last 20 years.
So, because if we look at bonds, we've seen that they probably haven't performed as people thought. Normally, yields would be going up, but I think they're the opposite. I might get that wrong. But so I guess, do you think it's just there's a lag period to what might happen and we might go back to sort of how bonds used to behave? Or what's your opinion on how markets are reacting to current?
I think right now, I'm going to assume that basically that we have to understand that growth and inflation have a negative trade-off, okay? In other words, that to bring down inflation, growth has to go down, okay? But in the last 20 years, there hasn't been that negative trade-off. It's so-called, it's known otherwise as the Phillips curve. It was a very flat curve. So, central banks can do whatever they want. But that curve is becoming less flat, it's become more concave. Which means that, if inflation is buoyant, that means central banks will have to kill growth to bring down inflation. So that is what we're talking about. You cannot have the lunch and eat it too, okay? You could, when China was exporting deflation to the rest of the world, and you decide, we don't want China anymore. We don't like them. So from that point of view, this is what this is going to be about. So I think, listen, what this means is that real rates will have to go higher, real interest rates. Because ultimately, who cares about nominal interest rates? Because everything should be thought of in real terms. Right now, real yields, 10-year US real yields is at what? Barely at 80 basis points. Which is crazy. This is why, Jay Powell, last week, he was getting all huffed up because he's listen, I've been trying to tell you guys, meaning the market, rates will have to go up. And he cannot believe every day he wakes up, get out of bed, look at his Bloomberg terminal, and then the market is expecting rates to go down next year. He says, listen, the market clearly doesn't believe me. So he told the market again, you guys are idiots. Listen to what I have to say. Because you know what? Because Jay Powell is looking at, his financial condition index, and that thing has been easing for the last almost 2 months now. It's pretty amazing. Every week it's been easing. Stock market's going up, or credit spreads coming in, or the real yields going down. So, listen, there is no way. Central banks today, they need the cooperation of financial markets to be able to tame inflation. Because these days, monetary policy works through, again, the stock market, the bond market, the credit market, the foreign exchange market. For monetary policy to work, for monetary tightening to work, they need to drive down the stock market so that to basically slow down consumption by destroying some wealth, if you like. They need to basically reduce, investment by essentially, increasing the borrowing costs for companies, higher credit spreads. They need to, make countries export more expensive so as to basically, slow down export a bit. So you need a stronger currency, high interest rates, and a lower stock market. So unless these things work in the same way the central banks do, they haven't tightened. This is why it's ironic. The last 2 months is as though interest rates have gone down. Okay? This is why, rates are going to have to go a lot higher. That's the bottom line. So I'm not going to be here to tell you, it's going to go to 5%, 6%. I hope not. But I think for me, I think 4.5% is very, very likely. Okay. I'm talking even in the US. I'm even talking about Europe. The UK should go a lot higher than that. Okay. Because people don't realize this. UK, especially UK. Okay. It's all about stagflation. UK was very prone to stagflation in the 70s. Because UK, you're talking about 50% of government workers, are unionized. Another basically 15% of private sector workers are unionized. You see what's happening in the summer already with the strike, basically industrial actions. This can get very hostile. Okay. Liz Truss, by the way, in my view, she has no backbone. She's talking about, well, I'm going to be Thatcher, but at the same time, she's doling out hundreds of $billions. That's only going to basically make the inflation picture worse. So, you got to basically decide. Thatcher was not a populist. She was basically a fiscal conservative. But the bottom line here is what this just means that interest rates are going to go higher. Because all these central banks know, like if inflation doesn't come down, they all toast. They're seriously toast, okay? Because for one thing, they all know the biggest problem with inflation is that it just basically will be felt much more by poor people. We all agree today, especially in the Western world, the biggest problem we face is income inequality. And inflation is only going to exacerbate that even more. So if you go into an environment in which income inequality gets getting worse, there will be a revolution. I mean, I'm telling you, there's going to be a revolution in the US already. And I can only imagine what happens, if we're going to have right now people, I'm very saddened by the passing of the Queen. I think she was a great queen. I think her passing away, in some sense, spells the end of an era, end of a good era, okay? Because I think, she would hate to, live to see what is in store. And I can't even imagine, I don't think Truss is going to last more than 2 years. And then we're going to have a power labor government, which is going to bring us back to socialism. You tell me if that's going to be positive for markets. But so a lot of things can go wrong. A lot of things can go wrong because people are no longer thinking in economics terms. Okay.
So that's the issue, that people have gone away from maybe being more practical to being this ideological thinking.
Exactly. I'm so glad you basically pointed that out, because right now it's like, well, listen, Truss says she wants to be like Thatcher. Well, what does that mean to be like Thatcher? Right? Thatcher and Reagan were ideologues. Now, guess what? It served them very well. It served them very well. Because you know what? At the time, the world was facing the threat of Soviet communism. It was faced with the threat of, basically total labor unrest and, I don't know, a backlash to capitalism and entrepreneurship. So they, by being able to stand tough and, fall back on the ideology, they were able to basically bring things back to where they were. I mean, make the world a better place. Today, this doesn't make any sense to be ideological. You're in London. I love talking about it because I think it's fascinating. Think about Liz Truss, right? Only 6 years ago, David Cameron went to Beijing and told the Chinese, we want to be your best friend in the West, okay? Only basically a few months ago, Boris Johnson came out and said that he's fervently Sinophile. It's not that, these people thought Cameron and Boris Johnson don't understand China's agenda, whatever. Yeah, I mean, China's been a dictatorship for a long time. In fact, even when Richard Nixon basically, went to China, he knew what he was dealing with. But at the end of the day, for Cameron, for Boris Johnson, perhaps they were thinking, oh, well, listen, at the end of the day, I'm elected prime minister to serve the best interests of my own people, British people. Boris Johnson, he said, well, I've got another EU. I got to basically find another market I can export to. Naturally, China being the second largest economy in the world is the place to go. I mean, to me, it's pretty amazing now looking back. I said, well, for a while, I didn't understand how this Truss managed to win. Okay. Now I think I understand. Because you know what? Rishi Sunak, he lost because if you recall, back in July, it was discovered that when he was chancellor, he wanted to make London the market of choice for Chinese businesses. That's what really brought him down. Because what's happening in the UK is because the Labour Party has decided to make itself completely unelectable, the whole Conservative Party is now moving towards the right. Essentially, especially now the European Study Group, the far right, which is now basically the power broker. Who do you think they backed? Liz Truss. She was more hawkish on Russia, than even Boris Johnson. She was more hawkish than Russia than Biden, actually. It's pretty amazing, right? She was the first one to say, oh, well, we have to basically throw Russia out of the entirety of Ukraine, right? She had no interest in talking to the Russians. She's the one who wants to designate China as an official threat to British national security. And she's the architect of basically this bill passing through British Parliament that will essentially, unilaterally change the Northern Ireland Protocol, which will completely blow up the whatever agreement that Britain basically signed getting out of the EU. Okay, so if you're telling me that's not ideological, I don't know what it is. So you get out of the EU, Brexit, and now you are burning your bridge with the EU. You want to basically burn your bridge with China. And I don't know, does basically Liz Truss really think that she can reinvent Britain just by exporting some more stuff to Australia and New Zealand? I mean, come on. Okay, so this is what I'm saying. At the end of the day, I believe, politicians, political leaders, they're elected to serve the best interests of their people. Her job is to basically bring prosperity to the British people, okay? And not to basically play, this moral, whatever she does, I don't know. Whatever it is, that is a dangerous thing. But the world is moving in that direction. And that's what scares me. But of course, it creates tremendous trading opportunity. Now, it just means that it's not a basically buy to whole environment. If you think that, then you're crazy, okay? It's now understanding the pressure points. When are they going to do this? When are they going to do that? And trying to basically take advantage of the volatility that's created by the sort of the ideological clashes that are basically going on in the world. That's getting worse.
Yeah, so is that your goal for Unbound? You're trying to sort of maybe help people go away from that ideological thinking to more practical and actually looking at what's happening in the world?
I mean, honestly, yes. Because I love the Brits. I guess I love Britain of yesterday. I think about, when I think about the British people, I think they're some of the most talented, they're probably the most talented people in the world. In terms of how much they've accomplished, how much they've shaped our world, okay? You don't even have to like the British, okay, to basically recognize that, the world would not have been the same without their contributions. And I think, if I think about the greatest contributions, why are basically all these British thinkers, British writers, British whatever, scientists really shape the world? Because you know what? The Brits are not exactly ideological. They're inquisitive and independent-minded people. They are prepared to think out of the box. And foremost, they're pragmatists. They're pragmatists. This is why, Britain has basically constitutional parliament before France did, even without a goddamn bloody, basically, French Revolution. Because the Brits are pragmatic. The world needs pragmatism more than ever right now. And unfortunately, and pragmatism that are predicated on facts, okay? Because right now, too many people have opinions that are completely uninformed by facts. And that's what I'm trying to do. In my little way, I want to help move the needle, because on Wall Street, you know what? One thing I learned on Wall Street is that unless your view is based on facts, you are destined to be pushed aside and basically get run over, basically. Because Wall Street doesn't care about your politics. It doesn't care about your opinions. If you're not right over time, who cares if you got a PhD from Harvard, you worked at whatever, okay? At the end of the day, that's the only thing that matters. So what I want to do is to bring this non-ideological approach to looking at facts and trying to basically have people draw conclusions. And then we need to have debates that are based on facts. And what I'm hoping to help people do is why we engage in this debate. You know what? I'm going to help you basically make some money too. So to make it worthwhile. So that is basically the cherry on the pudding.
Yeah, perfect. Makes sense. So David, thank you so much for your time today. I guess my last question is that the message you want people to listeners to take away, or is there another message that you'd like them to take away?
I think the main message here is that the world is changing, and is changing not in a good way. And you have to think about how this is going to affect your life. I can help you think about what this means to your investment, but you also have to think in terms of, what? So where should I live? Okay. And what kind of education should I get? should I buy a house or not buy a house? Should I, like I was talking to someone today from London who just recently moved to Canada, thought it was a great move, okay, career move. I don't know. But the point here is that the way the world is undergoing this change is going to basically have a huge impact in every aspect of our lives. So what I'm trying to do is trying to help people think about, okay, the world, whether you are interested in economics, politics, or not, to the extent that what's going to happen is going to have a direct impact in your life. You better basically figure it out sooner rather than later.
Yeah,
and that's what I want to do.
Yeah, perfect, sir. I think that's the great message to take away. So, David, thanks again. We've talked about your website, what you do. Also, you've got a YouTube channel on Twitter. Are those the best places to find you, or is there anywhere else?
Yeah, absolutely. I mean, David Unbound, it's free. So, like on YouTube. So, you can start there. And if I get you interested, you can always sign up for my blog, which is very, very inexpensive because I want to basically make it affordable for everybody.
Yeah, that's a great way to do it. So I'll put that all in the description below for you. But David, thanks again.
Thank you for having me.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.